Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about time frames. What is the best time frame for a trader, day trader, swing trader, or even a long-term investor? So I hope you guys all enjoyed this. If you do, smash that like button, subscribe. If you guys want to learn more about trading and investing in the market, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So check it out down below. We talk about how to find these undervalued stocks. We talk about everything when it comes with navigating swing trading. So check it out, and you guys can get 51% off by using code money. So check it out down below. And guys, one last thing, we have new merch. We got new merch. We got hats, t-shirts. We got a trading desk mat, which is all customized by me. So check it out. We got Wall Street merch. So if you're a trader, if you're an investor, check it out down below. You won't regret it. All right, let's jump into this. So this is a very, very common question that I get asked on the channel is, Carter, what is the best time frames for trading? So here's the thing. Let me go ahead and pull up our charting here, and you guys can kind of see what I do here. So the first thing that I look at, obviously, is going to be the trend of some sort. So each of these lines, if you look really close, you can see these lines, right, represents 1 month of trading. So for me, I am a swing trader. So I buy a stock and I hold it on average for about 6 to 9 days. And the reason why is even if you look at a move like this huge move, which percentage-wise is 10%, which is astonishing. This is only 1, 2, 3, 4, 5, 6, 7, 8, 9 days, right? So this huge move is only captured in a short amount of time. So as a swing trader, that is what we are focusing on, just short-term momentum. Right. If you're a long-term investor, then I will start going to higher time frames. So right here, this is the daily time frame. So each candlestick represents 1 day of trading. Now, if you're a long-term investor, you still can use the daily candlestick. But more often, you'll start seeing traders use like the weekly, the monthly, because this will help determine really hard support. So you guys can see that Berkshire Hathaway, this stock has heavy support on this yellow line, which is a 50-day EMA line. So you guys can see in the past, right, where it almost hit it here, hit it down in here, hit it here, almost hit it here. So it just has really hard support. So, ideally, the higher up you go with your time frame, the longer you're going to be in a position. Okay. Now, if you go to the daily, you still can have a long-term investment off it, but more the less. So another thing that I use as a swing trader for entries, because if you're entering here on the daily, it's hard to find like those midday supports, midday breakouts. So what I do is I go to a lower time frame like the hourly or even like the 4 hourly. Going to like a lower time frame will help you find like these trend lines just like this. So we can see right in here, if we remove these these moving average lines, that it has heavy resistance right here. So what we do is we set an alert above this trend line for that breakout. So you throw an alert above it as the stock just continues to sell off. You just got to adjust it there. So that is what I do for swing trading. I'm more along the lines of use the daily and hourly, and you guys can see beautiful trend, sold out a good chunk of change right here. So now with this one here, we're pretty much out. Now for like day trading and other types of really short form trading, what I will do is I will look at minutes, right? Whether it's the 10 minutes, whether it's the 30 minutes. So very similar. The higher up you go, more often the longer you're going to be in a position. So if we like bring these moving average lines back up, you can see where, let's go to a different one. Let's see if we can find something here that looks interesting. So you guys can see the heavy support we've seen on the 10-minute 200-day moving average line. We kind of came in contact right in here. So it has heavy support in that range. sold off down below it. This could have been an exit point or a possible short situation. Now it's using it as resistance. Boom. Boom, and is just selling off. So that's one thing you guys can do as well, and going to like the 5 minute and all of that stuff. So the lower you go, right? So each candlestick represents 5 minutes. The lower you go, the quicker you're going to be in and out of the trade, because the support isn't going to last as long, if that makes sense. So guys, this is a short, brief video, but it's incredibly important for making money in the market. So I hope you guys all enjoyed this. If you have any questions, feel free to ask down below. Make sure you guys smash that like button, subscribe. I'll see you guys in there. Hope you guys have a great rest of your day. Check out our school, check out our merch. Take care.